Is the stock market shrinking? Though the market continues to grow in terms of total value, the pool of stocks to choose from is about half the size of the market's mid 1990s peak, and the number of stocks traded in the US continues to get smaller.
Joining me to discuss this and what the ongoing shift in the markets means for investors is IBD's personal finance and management editor, Matt Krantz. So, Matt, we know the stock market is shrinking, but why?
There's a number of reasons going on. First of all, a lot of companies are just getting delisted. Most of them, hundreds of them, are not able to maintain the listing standards of the major exchanges. Most of them because they can't, sadly, keep their price above a buck a share, if you can believe that. And if you can't do that, you get kicked off. There's other reasons they're being bought. We're seeing the fact that while we have a decent IPO market this year, it's not enough to refill the emptying of the market at the same time. And then you have M&A. Would you rather compete with Amazon or would you rather get bought by Amazon for $1 billion? And a lot of more companies are saying, let's take the latter route.
Right. And can you talk a little bit about why maybe having fewer but larger companies might be good news for growth investors?
That's a great point. I mean, we like to talk about it here as like you have a pond, and there may be fewer fish in the pond. If you know how to catch the one that's going to grow, that's going to be much better than catching minnows and carp that you'll just throw back anyway. So if it's like a perfect market for people that know how to look for stocks, because if you pick one that will survive and do well, most likely it will thrive. I just look at like a Tesla. That stock is up 10,000% in 10 years before it got added to the S&P 500. So had you caught that fish, you wouldn't care that there's maybe 1,000 companies that you never heard of that just kind of went away. And that's kind of the point of Investor Business Daily's kind of approach to the markets.
Right. And as you mentioned, it creates a little bit of a smaller pool, but what other opportunities do you think a smaller market might mean for investors?
So for one thing, if you're an index investor, it probably isn't going to affect you that much. So for example, maybe a few years ago, you could have bought, Mobil or Exxon. Now you buy Exxon Mobil as an example. So in that case, it had no effect on you whatsoever because you're just buying the index anyway. In fact, most of the experts I talked to said if you're sticking to the S&P 500, you're buying index funds, if anything, the market's expanding, the value of the company, that's the ironic part, is while there are fewer companies, they're getting bigger and bigger and bigger. So if you're just buying the top 500, you're probably not going to see much. But if you're looking for opportunities, there's a lot of bad stuff out there. There's a really good chance you're going to buy something that falls apart, that fails, that collapses, that vanishes, and you can lose it all. So it's really, really important in a market like this. It's like a survival of the fittest market. You got to stick with the winners because if you start straying and taking crazy chances on little guys that don't make it, you're just not going to get the kind of results that you think you deserve.
Right. And as you mentioned, sticking with the winners. And one of the interesting points I thought from your report was how younger investors are kind of driving this trend for individual stocks. Can you talk a little bit about the role millennial investors are playing in this?
Absolutely. So another reason I forgot to mention that we're seeing some companies vanish is they're not getting any support. So there's a big chunk of the market, hundreds and hundreds and hundreds of companies that have no analyst coverage whatsoever. So these are called orphaned companies. They're stocks. Some of them might be all right, but no one even knows about them. No one covers them. That's where the millennials are coming in. This group of investors are gung-ho about the market. They're willing to do their research. They're willing to go to the blogs and go to the IBD and learn about these companies and find things that Wall Street's ignoring. And that could be the counterbalance. These younger investors are willing to go beyond the S&P 500, to go beyond the Dow, and to find the next leaders. And if they do that, this could be a way to get the market to kind of change hands a little bit.
Well, Matt, it's so interesting. And thank you so much for your insights today.
Absolutely. Thanks for having me.
You can read Matt's reporting and more stock market coverage over at investors.com. For Investors Business Daily, I'm Alexis Garcia.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.